Hi, everybody. Look, we are going to go through the policies for every major party that are centered around property. So I'll go through Labor, Liberal, even One Nation, and Trumpeter Patriots, and the Greens as well. And we'll get a good understanding of how the housing policies will impact the property market in general. A bit of an advice disclaimer: this information is just for general information purposes only. So it's purely factual information. It does not constitute advice, tax advice, or credit advice, or anything along those lines. It's purely satirical in nature. First up is the Labor Party. So the Labor Party's proposed policy is to boost homes across Australia through specific targets compared to the Labor Party. What they actually have is they have a plan in place to reduce migration levels and implement a 2-year ban on foreign investments purchasing existing properties to alleviate housing demands. In addition, they are going to expand their first-home buying incentives. So they're going to expanding the first-home guarantee to allow buyers to purchase with a 5% deposit and not have to pay lenders' mortgage insurance, which could potentially save up to $23,000. Now, I don't necessarily mind this one because they also have a policy in place to build a number of number of properties. I believe it's about 10,000 properties over a 5-year period, and they are planning on specifically selling them to first home buyers as well. So that actually increases the overall supply of property in my view, and allocating them to first home buyers specifically could be a good ploy there, which is good. I feel it's a good measure. They don't have any policies in place to reduce negative gearing or capital gains tax or anything along those lines. They don't have any policies specifically around interest rates or broader economic measures or anything like that. So look, you'll find that a lot of these policies as well are really macroeconomic in nature, and they won't specifically target any area. They're more targeting a demographic, and primarily that is the housing supply and first-home buyer cohort as well. When we look at the Liberal National Coalition, they are planning on investing in essential infrastructure around those properties, around those development sites, really, which they believe will unlock 500,000 new homes by investing in those essential infrastructure points. So if you think about when you release new blocks, it's essentially you need to service those blocks through water, sewerage, power, phone lines, and whatnot. So they're going to invest more in the infrastructure. They're going to set a target for the number of apprentices and trainees in training. So if you think of the trade shortage as well that we have at the moment, they actually want to meet that trade shortage as well. Freeze any further changes to the National Construction Code for 10 years, which will allow builders to build to a specific code for a longer term period. Implement a 2-year ban on foreign investors and temporary residents, which will decrease the demand in property, and then reduce migration levels for permanent migration down to 185,000, from 185 to 140,000 for 2 years, and then 150,000 in year 3 and 160 in year 4. So reducing actual migration levels, which will reduce the overall demand. So a couple of things: increase supply by investing in infrastructure around the properties themselves, increasing supply by increasing the number of trades, and then reducing the changes around the construction code. And then lastly, reducing the demand by making it harder for foreign investors and temporary residents to purchase homes, and then reducing demand again by reducing migration levels, which is similar to what the Labor Party had there. In terms of first-home buyers incentives, this was their policy was around allowing first-home buyers to deduct interest on the first 650,000 of their mortgage, and not having a cap on the mortgage size or home price. So they want to be able to allow you to deduct that interest. So potentially, look, 6% on 650,000. I think 6% is the current interest rate. We'll work on a nice round number of 5%. 5% is 32,500 in terms of total interest. So 6% will be a little bit more than that. It'll be closer to sort of 35,000, 36,000 there. So that potentially is the amount of interest that you can deduct as a deduction on your first home, which for the average first-home buyer, typically they're lower to middle income earners. They could be on, let's say, for example, 20 to 30% averaged income tax rate. So if we use 25%, that means that essentially they'll be getting around about the $7,500 worth of tax savings there after taking into account the average income tax, roughly, depending on what their average income tax look like. They're also going to expand eligibility for the home guarantee scheme. So the home guarantee is where they guarantee part of the loan, which means that they only have to pay a 5% deposit. So that's not only first-time buyers, there's some regional buyers as well. And then there's also, it is first-home buyers, regional first-home buyers, and then family homes, eligible single parents and legal guardians from at least one dependent with at least one dependent to buy a home. So this means that they can use as little as 2%. So for single dependents, they only need 2%. And then for first-home buyers and regional first-home buyers, they are allowed to buy a home with as little as 5% deposit as well. And then in terms of tax, interest rate, or lending access implications, then they're offering those tax deductions to first-home buyers to reduce the financial burden of home ownership. So that is a bit of a macroeconomic taxation policy. And then they're working with financial regulators to reduce changes to lending rules to allow Australians access to a mortgage, or easier access to a mortgage, especially young Australians, because current home rules mean that 35% of first-home buyers actually miss out on buying their first home because they can't afford it because of the strict lending standards there as well. So they have a bit of more of a macroeconomic approach where they have taxation alleviation, they have first-home buyer easier entry, they have reduced population growth, which will alleviate demand, they have increased supply around the supply of trades, and then infrastructure around property building as well. If we move on to the Greens are looking to deliver 610,000 affordable homes over the next decade. They want to establish a federally owned public property developer to rent and sell homes below market price. Look, this is aiming to provide 70% of homes as rentals capped at 25, and the remaining 30% will be sold off at less than market rate at just over the cost of construction, allowing first-home buyers to save up to 250,000 compared to market prices, privately run market prices. Look, this is alleviating a lot of supply and it will, I'm not too sure about the actual build of these properties. 610,000 properties over a decade, it's still 61,000 properties per year, and then selling them at less than market value. I'm not exactly sure what that cost is going to be to the budget, or whether this policy is actually realistic. In theory, it does aim to address the supply shortage. It doesn't aim to address the trade shortage or the infrastructure shortage around these new builds. They don't have anything specific for first-home buyers. It is simply that they are going to look to sell the 30% of the homes that they're building to first-home buyers, as well as allocating homes to the First Nations community and key service workers. And then in terms of taxes and interest rates and lender assessment implications, they are looking to phase out negative gearing and capital gains tax for investors with multiple properties to curb speculative investment and reduce or redirect benefits to first-home buyers. So look, that being said, I don't know what sort of appetite there is to reduce negative gearing and capital gains. Personally, look, politics aside, personally, I feel that if you're going to look to reduce negative gearing and capital gains tax discounts for investment property, then you should do that for investments in general, because it is an asset. The only difference is it's a physical asset. And that being said, if you're going to look to reduce negative gearing for investment property, I feel that you should do it for investment assets as well. It's just my opinion. And then moving on to the One Nation Party. So One Nation are looking to introduce a 5-year moratorium on GST on building materials to help to reduce the overall cost of new housing. They want to cap visas at 130,000 per year, so even more drastically reduce the migration, and which they believe eases the pressure on housing, wages, and infrastructure. They don't have any specific first-home buyer policies on their website, at least, and then nothing in terms of tax reforms, whether it be any proposed changes to negative gearing or capital gains tax, other than to oppose any increase in GST. Moving on to Trumpeter Patriots. Trumpeter Patriots want to cut immigration to sustainable levels. There wasn't any detail on their website around the number or what they determine sustainable to be. They want to limit ability for foreign buyers from buying Australian homes and agricultural land, prioritize migration from nations with compatible values, I'm not sure, they didn't list the nations that do have compatible values, or what those compatible values are. And then they have been advertising lately, and it shows on their website as well, that they want to build a high-speed rail network within 120 kilometers of growing satellite cities to major CBDs to unlock affordable housing for families while slashing commute times. So they believe that if they get a high-speed rail, it will cut commute times down to 20 minutes to get into the CBD, and it will allow people to live in more affordable regional areas. Nothing specific in terms of first home buyer incentives or making houses more affordable. They want to allow Australians to use up to 30% of their superannuation for a deposit and cap interest rates at 3%. So these are typically macroeconomic policies that are going to increase the supply of money if they do look to implement these policies. But between you and me, nothing political aside, I don't think the Trumpeter Patriots are going to get this one over the line. So ultimately, that is the song and dance. That is the analysis that I've conducted for you on the major party policies. If you do have any questions, please don't hesitate to send them through. I'm more than happy to answer any questions that you might have. But apart from that, thank you very much for watching and have a great night.